are concerned, that's not the case coming down to the benchmark. So that's something that you need to keep an eye on as well. And speaking of the broader markets, let's get in the first conversation going on, and that's certainly going to be around the kind of impact yesterday's budget had and the announcement it had on gold prices. Consequently, a lot of these gold retailers, actually not just gold but jewelry retailers, which have actually seen a spike yesterday, and at least a handful of them are advancing in today's day of trade as well. We want to try and understand what the implications of the cut in basic custom duty in gold is and what sort of an impact it can have as far as the sector is concerned. So we have Mihika, Mahima and Anushi, who's going to join us in this conversation. Of course, Mihika is already here with us. But yes, Mahima and Anushi, actually, Mahima leading this conversation. So Mahima, let's start off with the announcement that came through and the kind of implications.
Right, Agam. So just to give you a brief of what came in the budgets yesterday, well, so custom duty for both gold and silver has been brought down to 6%, which was 15% prior to this.
Right.
So quite a significant cut there.
Yes.
And for platinum, this has come down to 6.4%. Now, just to understand the impact of this rate cut in the import duties, well, this creates a level playing field for all retailers, first thing, and overall for the entire sector, this would curb the overall gold smuggling that has been taking place in the black markets and the unorganized place as well. Plus, the demand which is sitting, which is the kind of demand that all these retailers were facing some kind of pressure because the gold prices have, touched the sky in the past 2 quarters.
Yeah.
So they have a lot of inventory in place right now.
Sure.
And this kind of cut in gold prices will lead to an increase in demand, and probably their inventory will now, will get cleared off.
Right.
Plus, going forward now we'll be seeing a lot of festivities coming in, so we'll also see a push there. So
right.
it's definitely a positive again for the retailers. And majorly, this is a positive for companies like Kalyan Jewellers, Titan, of course, and Senco Gold.
Right.
Now, just on the negative side, this will largely depend on the inventory that these companies already hold, because they might be holding this inventory at the prior prices.
Right.
So it will be interesting to see how in Q2 this will overall impact all these retailers. Right. So the quantum of impact we'll come to know post the Q2 numbers probably.
Right.
And overall also, because of this entire thing, the gold prices have fallen 5% since yesterday. The spot prices, if we see, that is the 995 gold, and for silver, that is the 999 silver, has fallen around 3% since yesterday.
Right. I just want to add one critical point here. It may have been missed out, but Mahima just mentioned that that this could actually lead to a curbing as far as the illegal import of gold is concerned. Remember that a lot of these listed players that we have in the markets, and unlisted players as well, are from the organized sector. But the unorganized sector in the jewelry segment is huge, which is why even companies as large as Titan can in fact manage to grow in this particular sector. Now, because of the illegal imports of gold, if that can be curbed, naturally the unorganized sector potentially will be a little bit more hit as compared to the organized sector. And that's the other reason why you could see an indirect impact, a positive one, on those from the organized sector. And speaking of the organized sector, speaking of the listed players in this case, let's take a look at each one of them and see how things are panning out for them. So, Anushi, let's start off with Titan. How do you see this happening?
Right. So, before we get into Titan, I just want to bring about the kind of segments it has. So, it's important to note that jewelry is not the only part. There's watchwear and eyewear also. So 83% of revenue contribution is from the jewelry side. That remains on the bigger side. Now, if we are to look at the company's market share also, it has about a 8% of market share in the jewelry business. This is in the organized space. Now, this is again a double of what they had before 5 years. But now coming to as to how Titan has done overall, if you have to look at its the growth perspective, it has in these last 2 quarters, we have seen the company clocking in about 9% growth. While this is in single digit, this is lower compared to the double digit growth that they had a couple of in the previous quarters as well. Again, what has been driving Titan as a stock is the outlook of its carat lane business. Carat lane continues to remain on a stronger trajectory, but Mahima has correctly had highlighted on the inventory setback. So inventory continues to remain as a watch out for Titan because of the higher gold prices that they had been having it. So higher gold prices and the higher inventory at that continues to remain on a watch out, and we have to ascertain the impact it has in the next quarter onwards.
Right.
If you have to look at the management guidance for the company, 15 to 20%. So despite the 9% growth that we are looking at, 15 to 20% is the growth guidance that it maintains, and
right.
EBIT margins will be at the 12 to 13% of end.
So just to note, a little bit details about Kalyan Jewellers. It has 6% market share in the organized jewellery sector, and it has pan-India presence. 38% of its presence comes from South India, while 62% is the non-South part of it. One thing that is key to be noted with Kalyan Jewellers is the strategy that the company is currently employing. Now, what the company is doing is they're going to operate via both the COCO, which is company owned and company operated, as well as the FOCO, which is the franchisee owned and company operated models in the Indian as well as international markets. What this approach basically aims to do is to adopt an asset light model, which will help reduce the leverage on their balance sheets. When you talk about their plans in FY25 itself, they plan to open 80 new franchisee-owned, company-operated stores in India and 6 internationally. And, it's key to know that 14% of their showrooms are in part of the Middle East, while 86% are that from India. And they're also in process of converting 20 stores from the company-owned model to the franchisee-owned model when you look under the long term. When you talk about the financials of the companies, now 29% revenue CAGR has been observed over the years of FY21 to FY24. And this was driven by expansion of the same-store sales growth, and as well as intensive store expansions. The company added 116 stores during this very period itself, and management is aiming to improve the SSG in the mid to high single teen digits. However, Motilal Oswal does expect some contraction in their margins due to the higher mix towards the franchisee-owned stores. But when you look at the return on equity and the ROIC on the invested capital, these metrics have improved, and even their working capital days have improved, employing the strategy.
Right, absolutely. So from there on, let's also talk about the relatively smaller company here, the Senco Gold. Mahima?
Senco Gold is relatively very small as compared to, where Titan and Kalyan Jewellers are.
Yeah.
But, something that really stood out for me in Senco Gold itself is that all 3 companies are very different. While Titan believes in holding inventories and Kalyan Jewellers is now shifting to a different model, Senco Gold completely, opts for asset-light inventory holding.
Absolutely.
So that is something that will benefit Senco Gold, considering the custom duty cut now. Plus, the management is very positive when it comes to the future outlook of the company. They're planning to open about 15 to 20 stores in financial year 25 itself, and 70 to 80% of the growth is targeted in the eastern and northern India. They're also planning to improve their EBITDA margins towards that 8% mark, and they're expecting a top line growth of anywhere between 18 to 20% in FY25. They're also planning international expansion, where they plan to tap global market and strategically over the next 5 to 6 years, of course. And what they're saying is that with a 20% growth so far, and same-store sales growth of 12%, whatever they've guided looks quite achievable to them. And overall, also if you see the revenue trajectory of the company has been growing at a CAGR of 19% since the past 3 years, which is quite impressive growth. And overall, lastly, just one point that's stands out for me for Senco Gold is that it's the only listed company which has also entered the lab-grown diamond space under a different brand name, of course, which is Senes, whereas the other companies are still, evaluating the entire lab-grown diamond space.
Sure.
So that is something that stands out for me when it comes to Senco Gold.
Absolutely. So in that case, I reckon growth rates for all the 3 companies will be important, and notwithstanding the size, because Senco is, as Mahima mentioned, relatively small as compared to something like a Titan or a Kalyan. So how are valuations looking, Anushi, at this point in time?
If you come to valuations for all 3 of these, I wouldn't like to make a peer-to-peer comparison, because if you take likes of Titan, again, it holds multiple segments, so it wouldn't be fair to compare it. But if you have to just see how it has been on a trailing basis versus how we can see it in the forward basis. So Kalyan has not cheap at this point, 100x that it was in FY24 based on its FY24 EPS. From there on, it's seeing about a 67x of PE over there. The stock price return itself, so return versus growth over year, it has seen about a 37% of a return in this 1 year period itself. Coming to Senco Gold over here, it has remained more or less in the 39 to 42x of range. The PE stands over there. Again, this is also one of the other strong performers in the three that we are mentioning. 166% of growth it has clocked in this 1 year period, while in this 6 months it has seen about a 29% growth. Now, while it comes to Titan, again, it continues on this 88.6x x of FY24 PE, while it's FY25, it stands at about 73x of PE. So it is narrowing down from there. While if you look at its stock returns, it's not done comparatively as well as the likes of Senco Gold or Kalyan Jewellers. Again, 17% growth in this last 1 year. This is also because of the kind of growth it has seen compared to the other two. So, yeah, that is the bit on the valuations and the stock performance part, if you have to look at it.
Yep, absolutely. But the final point that we wanted to also address, when we started off with that, the fact that a lot of these companies are taking over market share of the unorganized markets. Mihika, what can you tell us here?
Yeah, this is the kind of trend that has been observed in the industry. And even if you look, over the years, in 2000, according to Kalyan Jewellers, presentation, the share of organized jewelry was only 5%, while in 2007 it was 6%. 2020, between this 2007 to 2020 period, it saw a jump to 32%, and currently stands around 36 to 38%. So there has been a shift from the unorganized to the organized channels, and Motilal Oswal expects this shift to continue. The organized market clocked 18 to 19% revenue CAGR, and the total jewelry market reported an 8% revenue CAGR during the periods of FY19 to 24. And the total jewelry market is reaching a market value of around 6,400 billion rupees. And when you talk about the factors that are fueling this trend, one is increasing ticket prices. This has also got to do something about the kind of consumers. I mean, wedding wear is 60% of the industry, while daily wear and fashion wear have a lower pie. Also, enhanced shopping experience and a greater product variety to cater all the different needs for jewelry.
Right, absolutely. And that perhaps is going to be a critical factor as well. Now, it comes down to how much more of the unorganized share can these listed companies, or even for that matter, unlisted companies gain. There is no doubt about the fact that 2/3 of the market is still untapped. But it doesn't also mean that all 100% could be conquered anytime soon. So that's the other factor to keep an eye on. But growth rate is what a lot of these investors are keeping on their mind. And that's the reason why the valuations, even 1 year forward, are at slightly heavier. But, many may argue, when was the last time Titan wasn't valued at 60, 70 times? So that's also something to keep in mind. But on that note, we will slip into a short break. And on the other side, we'll continue with all the market action. Back in just a bit.